And we are live. Good day to everyone from Bulgaria, and if by any chance we have any visitor from abroad watching this podcast. Usually all the content is in Bulgarian language, but now we have the one and only Mr. Greg Foss, so we're gonna speak in English. Did you learn any words in Bulgarian, by the way, when you were here?
I loved visiting Bulgaria. I'll have to check back. I have the notes that Marina gave us, right? How to say certain things. I have to admit I've forgotten, but I haven't forgotten the trip. The trip was amazing. I show pictures all the time to people. I tell them that, here's a body from 5,000 BC, so 7,000 years old. Like it was just an amazing trip, Plamen. We had a blast. Jeff Booth and I talk about it frequently. You did a great job. It was great to be there.
It was really like once in a lifetime opportunity and experience. I remember while on the trip I was thinking like, wow, what a wonderful time I'm having right now.
It was crazy. And then just the people, I got to know people better, like Canute, Jeremy, and then certainly Natalie and Jeff Booth, who I'd known a little bit, but when you spend one full week with people, you really see their true colors. Just a great group of people and great group of hosts. Bulgaria is just full of really, really nice people. I'll never forget the trip.
Awesome. I'm glad to hear that, now after the honeymoon effect wear off, you still fondly remember of your time in Bulgaria.
Oh, yeah. I'll go back 100%. I'd love to go back. I need to go to Turkey. So that's not too far away, and then maybe Croatia. That whole area is pretty cool.
True, absolutely. Okay, let's get down to the chase, because I know that Bulgaria would like to hear your opinion on a bunch of things, and let's start with the news of the day that started already months ago. Banks are going under. So can you just as quickly as possible just explain? Okay. Why are these banks going under? Is it someone's fault, or is it no one to blame? It's just how it works?
Well, okay. So yes, always there is somebody to blame. I'll explain why they're going under first, and then we'll probably be able to, piece together the reasons pretty easily. So first of all, what people need to understand about banking, and this is ubiquitous across the world. It doesn't matter if you're a bank in Bulgaria versus a bank in Europe versus a bank in United States, okay? All banks have a tremendous amount of leverage, which is to say that for every $100 of loans they make, which on a bank's balance sheet, loans are assets, for every $100 of assets, they only hold $4 of their own equity capital. The other $96 is borrowed from other people, meaning it's borrowed from other depositors, right? Depositors essentially make loans to the bank. The bank takes these loans and then re-lends it out in effort to make what's called a net interest margin, right? They pay depositors a certain amount of money, a pretty minute spread over zero. Then they lend it out, and that spread is called your net interest margin. But they do it levered 25 times or more. How do I get 25 times? Again, $4 of equity capital on $100 of assets. There's your 25 times leverage. So those assets can change in dollar value, market value, due to a number of things. Primarily with banks, it's because of credit risk. It's because you lend money to a counterparty and their credit quality goes down, or their perceived credit quality goes down because the world enters a recession or whatever. That's credit risk, and that's reflected in things like a widening spread that you're supposed to lend to Plamen. Plamen goes to the bank. 2 years ago, Plamen can borrow at prime plus 2%. Now, because of changed conditions, including potentially the changed condition of Plamen, the proper rate is prime plus 4%. Well, that incremental 2%, which is not being charged on the loan, gets reflected in the price of the loan, which changes from $100, it goes down to, let's say, $90. So that essentially the yield makes up for the changed risk of Plamen. That's pretty simple, right? But the problem is when the mark to market goes from $100 down to $90, and you're only holding $4 of equity capital, that means the other $6 is depositors' money. Essentially, they've lost that money on a mark-to-market basis. That's credit risk. What's got the banks in trouble primarily in the United States and, globally is not because so much that the credit quality changed yet, it's because the interest rate environment changed. They were taking these short-term deposits and lending them out to long-term government borrowers at low interest rates. Now, here's the thing. They were able to capture an increased net interest margin because of the upward shape of the yield curve and because all the central banks were saying things like interest rates are going to remain lower for longer, right? Well, the bankers said, well, if they're going to remain lower for longer, I can take these deposits, move them out on the yield curve, and capture a larger net interest margin because of the shape of the yield curve, the upward sloping yield curve. Well, guess what? They were wrong because interest rates didn't remain lower for longer. In fact, interest rates have increased at the fastest pace in history. Yeah. Okay, which means when interest rates go up, bond prices go down, which means the mark-to-market loss on the bank's balance sheet is substantial due to interest rate risk, not necessarily credit risk. Now, here's the problem. We haven't even hit the credit crisis yet, and banks have had to chew through a lot of their risk-absorbing equity capital because of interest rate risk. So the banks are undercapitalized. Who's to blame? Well, first of all, you have to look at the bank management, the risk managers of the bank, and say, guys, you shouldn't have been mismatching short-term deposits with long-term treasury bonds. That's called GAAP, interest rate risk management. But here's the problem. They were told interest rates are going to stay lower for longer. So there's a little bit of blame from the bank risk asset managers. There's definitely blame from the central bankers.
The way they communicated things and what they said that they're going to do.
Correct. And then here's the one that I think makes the most impact is not just the fact that they raised rates, but they went so fast. Again, the fastest in history. I sent out a tweet this morning that shows the growth of interest rates compared to other epochs in history, recent history. The point is, Plamen, the banks are in bad shape, but banks are always risky. Everyone assumes banks aren't risky, but how can you not be risky if you lever yourself 25 times? That's risky. That's the nature of banking. So maybe Americans or the world is waking up to how risky banking actually is. Famous American Henry Ford actually said, though, over 100 years ago, he said if the average American understood how banking works, there'd be a revolution in the morning. So this was 100 years ago. So you see, like, banking hasn't changed that much. It's just people don't understand. They take it for granted. Oh, these things are too big to fail. Some of them are too big to fail, but none of them, zero of them, are too big not to see their stock price go down. And this is my biggest thing, is that bank stock prices are mispriced, and they're still mispriced relative to the true risk that you are absorbing. So, I don't think depositors in the short term are going to lose money. I don't think the US can afford to let depositors participate in like a Cyprus type bail-in. But that doesn't mean that bank stocks can't continue to go way down. And you're seeing that. Even Warren Buffett has been selling his bank stocks. And, he's the guy that says Jerome Powell's doing a good job. And by the same token, he's selling bank stocks because he thinks the banking system is blowing up. So one of those things doesn't add up, okay? Either Powell's doing a good job and bank stocks will be sound, or Powell's not doing a good job and bank stocks will continue to get weak. So Warren Buffett's talking out of both sides of his mouth.
Okay, I've taken a few notes, so I have a few clarifying questions or additional questions that I'd like to ask
Sure.
about the whole situation. So, so far, one of the statistics is how in the past, let's say 3 months or whatever, 100 days, whatever it is, 3 of the top 4 largest bank collapses in history in US happened
Yes.
now, right? In the past 100 days. And I saw this amazing graph that was showing in 2007-8, how there was like 250 banks or something like that going under, and there was like these bubbles showing their asset value,
their size,
and there was like so many small bubbles popping up here and there, and then we have on the right hand side 2023 3 gigantic bubbles that pretty much they tower over the 250 banks on the left. So can you please like elaborate a bit on that, and is there any hidden meaning?
Great picture, yeah. So don't forget, okay, so look, I went to school, so I'm Canadian, and the banking system in Canada is markedly different from the banking system in the USA, okay? We really only have 8 banks, and they go coast to coast, okay? They go from, there are no inter-provincial, which is the same as interstate. There's no inter-provincial banking restrictions in Canada. So our banking system grew up with 8 banks coast to coast, and they're big on a relative basis. Their asset size are big, but there's a rule of 1 in 10, or the rule of 10, where anything that exists in Canada, generally you multiply by 10 and you get the United States, okay? So population, you multiply by 10, you get the population in the United States. You multiply the GDP in Canada by 10, you get the United States. But if you were to multiply the banking system in Canada by 10, you'd only get 80 banks in the United States, okay? You know that there's still close to 5,000 banks in the United States right now. And when I went to school in the United States in 1988, there were 15,000 banks, Plamen. So these are small community banks that were restricted largely by interstate banking rules from being able to expand all across the United States. Now, those regulations have changed, but you can't change it overnight. I mean, just because 250 banks failed in 2008, 2009, in the last 10 years, in the last 30 years rather, 10,000 banks have either closed or merged, so that you go from 15,000 down to 5,000. There's still another 4,000 that they need to close or merge. That's what's going to happen. So the big banks will get bigger. The small banks will either go out of business or merge with another bank. And that makes the system more centralized. But in my opinion, this is one area where centralization is actually good, because banking is a very bad or tough business. And if you don't have a good banker, you fail quickly. And I think we're seeing that there's a lot of not good bankers in the United States. So I don't think we're through this by any means, but it's just a function of the structure of banking in the United States versus banking globally.
Okay, I have this question then. In your view, in your opinion, does this mean that the smaller regional banks had worse risk management than the large banks because they are the ones that started popping first?
Well, let's be careful here. All right. So there's 2 things. First of all, the banks that have failed have been top. FRC, First Republic Bank, was, I think, a top 20 bank, no question. And the other banks were close to that, within the top 50, which means there's so many smaller banks that are below it. But there's no question that the biggest banks, the Wells Fargos, Bank of America, JP Morgan, which one am I missing?
Morgan Stanley.
Say that again?
Morgan Stanley.
Well, that's not a bank. That's an investment bank. So JP Morgan, Bank of America, Wells Fargo.
America, the house code, American Bank, the first American bank or the house code?
Oh, that's US Bank Corp, and that's the 5th largest bank. I can't believe I'm forgetting the 4th one there, but it doesn't matter. I'll figure it out by the end of the podcast. The point is, those ones have a really good risk management by and large, not perfect, but better. They have access to hedging mechanisms that the smaller banks don't have in terms of sophistication, in terms of their ability to use derivatives and everything like that. So, yes, I would argue that the top 5 banks in the USA, or 4 banks for sure, are vastly different from the next 50. And then below that, it's a whole different ball game again. So the 5th largest bank right now in the United States is a bank called US Bank Corp. And it's not looking good. Okay, this is just my commentary. First of all, Warren Buffett owned 42 million shares of US Bank Corp. They sold all of it. Okay, they saw things there that they didn't like. Most importantly, Charlie Munger said, we see real estate. Problems with commercial real estate. And did you know that 50% of all commercial real estate loans in the USA are from regional banks? So, you know, it's a bit of a circular problem here, but it is what it is. Oh, I know what the other one was, Citibank. Okay, so you have those 4 banks, and then you have everybody else. Okay, so don't overthink things. Banking is risky. Interest rate risk has caused most of the problems. Credit risk is coming, and it's commercial real estate that could be the biggest problem. And 50% of loans in the USA for commercial real estate are on the books of the regional banks. So all of these things stacking up, I think we're just in the first innings of the bank crisis in the United States.
Okay. So JP Morgan already bought one of the failing banks.
Yeah.
Now
they didn't buy them, okay? They got subsidies to merge with them.
Exactly, yes.
Okay?
Yes.
It wasn't a purchase.
Yes.
It was a subsidized merger.
Yes. Where the government says if things go worse, we're going to share the
That's right. We'll take
weight.
half the losses.
Exactly.
And how does JP Morgan make the math work? They take the assets, which are the loans, and they assign those assets to their own loan managers, their own credit officers, and they fire all the guys that came over from First Republic because they were shitty to begin with. But headcount reduction takes all that expense out, and then you can make the return on equity work, especially when you have a backstop from the Federal Reserve. I mean, it's a thing of beauty. Jamie Dimon didn't just fall off the turnip truck, okay? Like, it's pretty simple what he's doing. But to make the math work, he has to get backstop subsidies from the FDIC.
So after this merger, though, I read somewhere that there is this wall. Again, you know, I'm not a banking expert, so I don't know the wall. So I just pick up some information from here, some information from there.
Yeah.
That apparently a single bank cannot have more than 10% of the deposit.
Oh yeah, that's regulatory. That'll change. Okay, look in Canada. Like, no, it has to. Look in Canada. We only have 8 banks. Divide 8 by 100%. Each bank has 12.5% of deposits on average. And the biggest bank probably
if it's equaled out, which most probably it isn't.
No, it doesn't. The biggest bank, Royal Bank in Canada, probably has 25% of all deposits. We don't give a shit. Like, fuck. This stuff is, these guys are such knuckleheads. They focus on the wrong stuff, okay? Like, having big pools of assets or liabilities, which is the deposits, is good. Because why? Well, if some leave, some can come in. Like, it's a washing machine. Whereas in the small banks, it only tends to go one direction, right? Either they all come in or they're all leaving. There's not a washing machine of recycling of deposits.
Yeah. Okay, so in your view then, in your opinion, regulation is going to change, and banking sector in US, as you mentioned already, from 15,000 banks down to 5,000, and what you're saying is that it's going to grow only smaller and smaller and smaller.
Yeah, down to 400 or less.
I see. Okay, so I have this question about the interest that depositors get from their bank versus the Fed interest rates. There is a big gap, And there is this charts that where people are saying M2 is shrinking, and the last time this happened was like 50 or 70 years ago during the 70s, and every single time it was after there was a big recession. And then there are some people saying that's not true because the M2 money supply actually is not shrinking because the money actually goes in these mutual funds or whatever they're called, where
money market funds,
where they're getting the yield. So can you please explain the whole situation, what exactly is happening, and what is preventing people from also putting their money there, and instead of let's say I have $20,000 in my bank account, instead of just letting it rot there, I'm gonna take 15, put it at 5% interest rate, and that rest of the 5 are gonna just remain as my settlement.
Liquidity. Liquidity.
Yes.
Look, I mean, economically, when interest rates are at zero, you don't really care if you're holding your money in a bank deposit paying close to zero. But when interest rates go to 5% and you can move that money into a money market mutual fund, you're smart to do that. You know, you earn $5 of interest every year on $100 deposit. So you do the math, and if you have 100,000, all of a sudden you're earning $5,000 a year versus zero, right? As far as M2 goes, I'm not an expert in calculating M2 and you know, there's different accounting entries and everything. I just will say this: the money supply will continue to grow forever because of quantitating easing infinity. It's the only way to solve the debt spiral. So let's not overthink that. Okay, M2 will grow forever because of the debt spiral, the global debt spiral, and banking itself is. You know, before they were able to get you, I mean, sometimes, I don't know if they did this in Bulgaria, certainly they did it in Canada. There was a time they would give away a free toaster. If you open a checking account at a bank in Canada, come and you'll get a checking account and we'll give you a free toaster, or we'll give you an iPhone and stuff like that. Okay. So look, I mean, people get sucked in. I personally don't manage my short-term liquidity with that fine tooth comb. You know, money market mutual funds are beneficial for sure, but don't forget that interest is tax deductible. After you take out the after tax, all of the hassle and everything, it's not as attractive as it appears. For me anyway, I prefer to have the liquidity in the short term, but it happens globally because people are frugal and they are smart about managing their short-term assets. So it's not surprising that it's happening. It's also happening because, once again, interest rates rose at the fastest rate ever in history. So people react faster than they ever have for a number of reasons, including the fact that Apple also now is offering 4.2% return on deposits, right? Apple. This is not a bank until it becomes a bank. Okay?
In partnership with Morgan Stanley, though, or who was it?
It must be. I don't know. Apple doesn't have their own custodial services to the extent that they can do that. But it doesn't matter. It's under the Apple brand. And people are like, oh, geez, I have my bank account here. I have Apple, blah, 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 blah. Okay, transfer, done. Okay.
That's my point, though. I'm asking this question because I'm just thinking, if just theoretically, which is gonna now exaggerate my point, but let me put it this way so it's as plain as possible. All Americans or majority of Americans or whatever do exactly that. Like take their money out of their regional bank, put it in Apple and get 5% interest rate or 4.2 whatever. And they're like, this is so much better. Obviously I'm gonna do it. It's hassle free. I just do it. I get the yield and I'm happy.
Yes, so they're not stupid, right? I mean, it's like walking past. Have you ever heard that joke? You and I tell jokes all the time. You know, there's two economists, they're walking along the street. Have you heard this joke? They're walking along the street and they see $100 bill on the street, right? Okay. And one economist walks by it without picking it up, and the other economist says, hey, why didn't you bend down and pick up this $100 bill? And the guy goes, well, if it was real, someone else would have picked it up before me. You know what I mean? Like it's like people don't clue in like to the opportunity until All of a sudden they pick it up and they're like, this is real. Like, don't just
until
keep
someone else picks it up and said, oh, I just found $100, and
That's
like,
right.
Jesus, I missed it.
And then he tells everybody about it, and all of a sudden they start walking around and they say, I'm not going to leave this $100 bill on the ground.
Yeah.
So, look, the world changes more quickly now because of social media, because of ease of transferring money electronically just on your iPhone.
Yeah.
All of these things lead to quicker repricing, if you will, in the banking sector, making banking more risky than it already was. And trust me, it already was a very risky business.
Yeah, I just want to say for the Bulgarian audience that Greg knows that I like to say Gabrovo jokes.
I still don't understand them that well, but they are funny. Yeah.
From time to time, I said him one or two jokes just to remind him of Gabrovo in Bulgaria. Okay, so we cleared that out. We cleared about the interest rate. We cleared about the money market mutual funds, and pretty much that what we should expect, and it's just like the natural thing to do is banks to centralize more and more. But could you please then elaborate? Isn't this bad, like for the customer? Like I don't understand, or do we prefer?
I don't think so. I don't think so. Again, because there's only a certain number of bankers in the world that really know how to bank properly. Yeah. Okay. Just because, let's say you're a small community bank in the Midwest of the United States, and the reason you're a banker is because your father was a banker, and the reason your father was a banker is because your grandfather was a banker. Like this gets passed down. Really, these are small banks with assets that are measured in the tens and hundreds of millions of dollars, not billions of dollars, right? And they know Mr. and Mrs. Jones, and it's a farming community. But trust me, they're not that good at managing risk. And this is what gets them into trouble. Whereas if you can centralize it into the bigger institutions that have branches in all sorts of the communities all around the United States. So this community is doing better than this community. So what's a farming community here and a technology community up there? Like in the case of banking, I am not a fan of centralization by and large, but in the case of banking, centralization of banking actually reduces risks.
I understand.
If you believe this, if you believe that their monitoring systems are correct, and that their risk management techniques are actually good, meaning JP Morgan is a good bank because Jamie Dimon, by and large, knows how to manage or survey the risks that exist within the banking system, and he knows how to play those risks and get paid for them. Not every single banker in the world is as good a banker as JP Morgan.
Yeah, because I was thinking why do these little banks even exist? And I was thinking, what's their competitive edge or whatever?
Nothing. Nothing.
Yeah.
Nothing.
Okay, so then though, you said like you have this small community regional bank in the middle of nowhere where there's a farming community or whatever. So what happens to them? And let's say when the bank goes under and go bankrupt, as you said, they're not going to lose the deposits because FDIC and US are not going to allow that. But then what happens? Is JP Morgan going to open a local office there?
Probably not JP Morgan, but you'll get one of the top 100 banks that'll go there, and it'll be there'll be mergers and consolidation, and then that top 100 bank gets bigger and bigger, and then maybe it gets into trouble, and then eventually JP Morgan swallows the top 100 bank,
I understand. Okay. So around all the failing banks, there was a few of these gems of different congressmen and congresswomen from US selling their shares literally 2-3 days before 8% drop or whatever.
I know. Let's not talk about that. I mean, the only reason I can't talk about it because I have no hard and fast information, but boy, does it ever look suspect, right? The guy was Dan Goldman, and he sold stock in First Republic Bank on the 6th of May, and 12 days later the bank had failed or something like that, right? 6th of May, sorry, 6th of March. And look, Plamen, I just let's focus on the positive.
Okay.
You know, like why Bitcoin is so beautiful versus why the fiat system is so corrupt.
Okay.
Like, I mean, yeah.
Okay, let me put this question to you then. So Bitcoin, when we did the Bulgarian Bitcoin conference back in October last year, Bitcoin price was, if I'm not mistaken, around $30,000.
30, okay.
Yeah, I have to check the graph, but please chat, correct me in the chat if I'm wrong. But let's say,
okay. Who knows? Yeah.
Let's say October. And my point is the following though, that after that Bitcoin dropped more to 20k, and then it dropped even more to 15k. And since then though, since it bottomed out at 15,000, like I haven't heard many good news on macro level and banking level and so on. And Bitcoin bounced out, went to 20, then 25, and then to 30, and now it's like 27, 28. So what is your opinion, if you have any, on is there like any drive behind this price action?
Yeah.
What's happening?
Because people realize the beauty of Bitcoin when they're concerned about their bank deposits, right? Self-custody Bitcoin, you don't have to worry about a run on the bank. You own that store of value. So there's that side of it. There's the side of it of positive things happening in the ecosystem, including adoption, including education, your education, Michael Saylor putting on the MicroStrategy Lightning Network education. There's a general, you know, the bad news of Luna Terra, of FTX, of Celsius, all that worked itself through the market. So, you know, I think all of these things contribute. The biggest thing for me, well, the two biggest things for me are education, meaning opening people's eyes to it, and adoption, because either of education or because people inherently now say, you know what, I lived through the financial crisis in 2008, 2009, and I realized we didn't really solve anything. The banks as they exist right now are more risky than they were back then. And you're seeing that play out. Like you just mentioned it with the 3 largest bank failures. Now, let's be careful. Those were commercial banks, not investment banks. Before, the problems were with investment banks. Investment banks like Lehman Brothers, investment banks like Bear Stearns. The only other big bank that was on there in 2008 was Washington Mutual, which was basically due to subprime mortgage loans. But all the other banks that failed were investment banks, not commercial banks. So those investment banks didn't take in deposits, basically, okay? They had to fund themselves in the open markets, in the bond markets. So, you know, 2008, 2009, in my opinion, is still a far worse credit crisis up until now. But I see the smoldering, I see where fire is starting now, and it will reflect what happened in 2008, 2009.
Okay.
How come you're not smiling? Come on, smile. You like, I'm not trying to scare people. What we're trying to do is tell the truth, right? Yeah. Like, I mean, this is a risky time, but thank God we have Bitcoin. Yeah. Like, the craziest funny thing is like, oh my God, it went from 15,000 back to 30,000. Here, look, I can't wait to, this is my tagline. It's stupid cheap, okay? It's going to 2 million. 2 million, okay? And we're worried about whether it's trading at 15,000 or 30,000. Yeah. Wake me up when it's trading at 2 million, okay?
That's the thing. That's the thing. I'm sorry. I do not look at Bitcoin in dollars or in euros or in leva, the Bulgarian currency. What I look at it into is value, and what I mean is, let's say, real estate. The way I see it right now, when I started investing in Bitcoin back in 2017, the price at the time was 3,000 to 2,700, something like that. So let's say 3,000. At the time, property in Bulgaria was, let's say, $60,000 flat. So this means that 20 Bitcoin per one real estate, right? Per one apartment. And then at the peak, when 20,000 bursted, it was like 3 Bitcoin per apartment. And then in 2021, at the peak, when price of Bitcoin was $60,000 roughly, let's say real estate already went up to north of $100,000 for a flat in Bulgaria. So this means though it went down still to 2 bitcoins per property.
Flat.
And now, let's say at 30,000, it's let's say back to let's say 4 Bitcoin. So the way I see it, I'm not gonna buy a property in Bulgaria until the prices of these properties go south of 1 Bitcoin. I just don't see it. How can a property cost 1 whole Bitcoin? Like, this doesn't make sense to me. I'm just gonna wait. I'm fine with that. Like, you know.
Okay, good. I'm not gonna tell you you're wrong. I mean, I'm old, right? I'm 60, so I already have some real estate properties, and you're going to say you're an idiot, and I'm going to say I had no choice. It was either that or holding it in shitty fiat dollars. So at least I did better than holding it in shitty fiat dollars. But now I will not buy another property without accumulating more Bitcoin to balance the two things.
Yeah.
But as I've said perhaps on your podcast, and I always say, I don't need to be 100% exposed to Bitcoin either, okay? Because Bitcoin is such a beautiful asymmetric opportunity to the upside, even if you only have 10 or 20%. And for most people, 5% of your portfolio in Bitcoin, it's still going to change your life, right? If it goes up 100 times, 5% turns into 500% of your portfolio.
There was this amazing Twitter thread that inspired me to write 2 blog posts. One is called "You're Going to Be a Millionaire," and the second one, I haven't written it yet. I have it in my mind. I just a way to space it out. So the second one is going to be. The first one story is everyone is going to be a millionaire, and the second one is going to be almost nobody is going to be a millionaire. So the first one is about how I'm confident 100% that I myself and my children will be millionaires in Bulgarian leva, in euros, and in dollars.
But it might not mean anything.
Exactly, obviously, of course. But my point is, we will have the title, I am a millionaire, right? And I looked at like the graph of median price of real estate in the United States. 1993, it used to be $100,000 for a property. Now it's $370,000 for a property 30 years later. So it's almost 4x. So in the next 30 years, another 4x, that's over $1.5 million. And most probably it's gonna accelerate, but that's a different topic. Even without speculation, it's still you're gonna be over $1 millionaire even in 10-15 years. So and my point is then I'm bridging this to, there is this from 2013, there is this amazing clip from a person that at the time, in my opinion, it was much more worthy of respect than it is today, who is Da Vinci. Do you know who Da Vinci is?
Well, not Leonardo.
No, Leonardo, that's what I mean, No, not Leonardo. I said Leonardo in my brain, it's like, Leonardo da Vinci. No, not Da Vinci. I mean the Afro-American person, Bitcoiner, from the very early days called Da Vinci. Do you know?
No,
like
I don't know who that is. No.
Okay, it doesn't matter. But the important part is 2013, he makes this clip, very passionate clip, where he's like, he makes it at the beginning of 2013 when Bitcoin is still at $100. And he's like, Bitcoin is so much more than what you realize. It's not just decentralized money. It's so much more. And this and this and this. And our just imagination is still like too shallow in order to be able to predict what is going to happen. And then he's like, listen, buy Bitcoin for just $1, $1 freaking dollar, and he curses in the video because he's mad. He was like, I know you're not gonna listen to me, it makes me mad, It's like, buy Bitcoin for $1.
That's the same,
This is going to buy you a million Satoshis. And he says, like, in the future, these million Satoshis are gonna be worth quite something, if I'm correct, what's happening. And at the same time, what are you risking? You're risking just $1. Today, the price of a million Satoshis is, let's say, $300 or $270. So, the price to be a millionaire in Bitcoin is gonna only increase, while at the same time, we are guaranteed all of us are gonna be millionaires in US dollars.
Yeah, that's not something that's gonna be that important because, it'll cost you $60 for a dozen eggs, right? $5 per egg. So I mean, you got to be careful how you measure your wealth. There's no question. But 1 Bitcoin equals 1 Bitcoin. That's or 1 Satoshi equals 1 Satoshi. That's a better way of looking at it, right?
Yeah. So I just went through the whole thing of we're all gonna be millionaires in dollars just because I really see it. It just makes sense to me, and I'm sure I'm gonna retire as a millionaire. I'm just guaranteed, pretty much.
No, it's almost guaranteed. Again, you're not gonna have enough money to retire though. So While at the same time with Bitcoin, I really don't know how many people will be able to be millionaires in Satoshis. Say that again. I don't know.
How many people will be able to make it to be billionaires in Satoshis?
Yeah, that's true.
Give it another 10 years and it might be out of the reach of majority of the population of the planet.
Yeah.
Okay, so I have this theory and this question that I would like to ask you about inflation and the role of the central banks and so on. There is this, there is a lot of content with Jerome Powell talking how, the goal of the central banks is to, control inflation and to be 2%. And, if it goes too high.
And full employment, though, here's the funny thing. It's also, he wants to control inflation and keep full employment. Those are the two stupidest counterbalancing objectives possible. Okay, you cannot do both in times of stress. You cannot.
Yeah.
So it's a dumb mandate.
Yeah.
And then the third one, which they never mention, is financial stability, which, okay, it's almost impossible to have both of them in times of stress, and it's entirely impossible to have all three of them almost at any time. So it's a dilemma. There's no question. It's a dilemma. It's not a mandate. It's a dilemma.
Yeah. So he says, when the only way that we know how to control inflation when it spirals up is to raise interest rates and stop doing QE, start doing some QT. And what happens though when you raise interest rates is the cost of capital for either people just financing, purchasing a property through mortgage or a business to expand or just to be able to survive, gets more and more expensive. So there is this pretty much view that the central bank's idea of solving inflation is you must lose your job because they're actually looking at the job market and
I know
how many people are signing up for employment.
Keep going though. You're explaining how ridiculous it is.
Exactly, and how so they want higher unemployment. They're even saying people shouldn't ask for higher wages because if they do that, they're gonna add fuel to the whole inflation fire, which is not something that they would like to happen, obviously, because they're trying to battle it. And then at the end, what happens is the central bank's goal during times of high inflation is for you to be poorer, for you to be unemployed, and hopefully your business either goes bankrupt under or just stops making money. Which is insanity if this is how we think inflation is getting under control.
It's insanity. Okay, yes, it's insanity. It's insanity. Plamen, I can't explain it any other way. That is why centralized control of the blunt object called monetary policy is so dangerous.
So, to the people who would say, but there is no better way, there is no other way, this is the best way we know.
For now, there's no better way from a centralized control of fiat until Bitcoin. And Bitcoin becomes the better way, where Bitcoin will replace the US reserve asset of the world, which is US Treasury bonds. The store of value becomes Bitcoin, and the US reserve currency of the world can still exist. But it exists because of open market, trade weighted balances of USA buying this much stuff, and but Bitcoin, it becomes the store of value. And it doesn't fluctuate up and down due to monetary policy led by, in many cases, unqualified lawyers. Jerome Powell is a joker, okay? He shouldn't be in that seat. And he's embarrassing himself, and he's embarrassing other people that support him. But most importantly, he's pulling forward gains to the present at the expense of our children in the future. And that's why I cannot forgive him, because he's stealing from the kids. And that's what makes me more mad than anything.
Okay, because the way I see it is that with the current control, with the current levers that they're doing, they're making things worse. The way I see it is that you stop inflation, the prices are rising by deflation, by technological advancement, by people actually working harder on their job instead of spending too much time in the kitchen.
Or like Jeff Booth says, right? Jeff Booth.
Yeah.
Jeff Booth, technology is deflationary. The problem, and let's paint this nicely back to the banking system. You cannot have deflation in a banking system that is 25 times levered, because if you have deflation, the collateral that you are securing the loan with falls in value, and if it falls in value by more than 4%, guess what? Your equity capital in the loan has vaporized, which means you need prices to go up in order to support the collateral value of the loan.
Yeah.
You look like you're mad. Not mad. You look like, see, it's as simple. It's like you know that that's the answer and you don't want to hear that as the answer. Not you, but most of the world. Like, this is just it. Like, one of the things I need to stress, and I need to become more vocal about this, Plamen, it isn't difficult. People keep thinking that it couldn't be this simple. No, it is this simple.
Here is where I get a pushback though, because when I say it's this simple, when I say just the system is broken, the system is working against you, people are saying like, I'm sorry, are you an economist? Are you working at a bank in order to know that? The way that they perceive is that you must be a banker in order to understand banking, in order to understand money.
They inherently know there's something wrong with getting a paycheck, money deposited in your bank account without you doing any work for it, okay? That for sure I know. Even my kids understand that. Dad, I got this money deposited by the government and all we were told to do is stay home.
Yeah.
Dad, I did no work for this. Why don't they just print money forever then and nobody has to go to work? See, they take it. They're logical.
Yeah.
So, I mean, people by and large are logical.
Just recently, someone from the audience asked the question, like, how do you battle up the question, yeah, but we need inflation? And when he asked, like, why, the other person says, well, in order for the economy to grow. And I'm gonna tell like a joke that I made myself. So I was like, okay. If we need the economy to grow, you know, for this we need to print money, then let's, you know, like print 100 trillion and, you know, fix the economy. And then obviously the person is going to be like, yeah, something's not right, like, because this is obviously not going to fix the problem. And then I'm like, it's literally the same thing as, let's say I have a 10 centimeter penis. I'm unhappy. I need it to be at least 15 centimeter. And what I do, I take the measuring tape and add a few more dividers there between the 10. And I'm like, now it's 15, idiot. Like, no, it's not. No, it's not. I just broke the measurement too. That's all I did. Like, nothing. My penis didn't grow. Like, no, it's the same size. You're not fixing the economy by printing money.
Okay, so if you could print yourself to prosperity, if you could eliminate poverty by printing money, how come there's still poor people in the world? That's the simple question to ask them. And that's because the wealth effect or the wealth divergence or gap actually increases when you print money. So, I mean, we've talked about a lot of this. You know what I love about you, Plamen, is you get it, but you keep asking the same question differently because you want and I'm not blaming you. It's because you're trying to help people understand. And I love that. But you know, the truth is some people just will never understand. And we have to stop trying to teach them. You know, the Darwin theory where the weak and the stupid in the pack of the animals, you know, well, this stupid guy, he wanders off outside the herd because he's just too stupid and he gets eaten up. But fuck it. You know, these people that don't understand, they're just going to get trimmed off. They're just going to get culled from the herd. Culled means for the strength of the herd, you have to lose your old, your weak, and your stupid. Okay? Well, we're going to lose our stupid because it will make the herd more stronger. You can't help the stupid, okay? Let that stupid animal wander out on the highway and get flattened by the Federal Reserve, or let that stupid animal, you know, not pay attention to what's going on, and then all of a sudden the lions come up and that's it. It's over. We can't help everybody. We can't rescue everybody.
Okay, I have a good question for you then that I don't have the answer for, which is about, you said that Bitcoin should replace the US bonds as the world reserve asset. At the same time, we have inflation currently in US. How much was it? Like 6 point something %, right? It's not over 7.
Say that again. What
is the current inflation in US? Like 6 point something. It's not over.
Oh, whatever. It's a short-term measurement, but yeah, it's got a 6 handle on it, I think.
Sure.
Yeah.
But I saw this person talking about how the like at the moment all bond holders are guaranteed to lose money. You know, that's the reality. You get 5% interest rate
on a real basis.
On a real basis, yes.
Yeah.
So you get 5% while 6-7% is the inflation. So literally you are guaranteed to lose money 1.52%. And his argument is that this cannot last for too long. Like, money is not that stupid, especially that type of money. So what is his argument is that people are not going to buy these bonds, even at 5% when they are losing 6-7% due to inflation. And therefore, he says, like, we cannot have like a negative yielding bonds for, let's say, 5 years and solely fix the problem. His opinion is like, no, this is not gonna work out. What he says is like, we should see for a few years extremely high inflation, and this is how you just purge the problem. What's your take on that?
Oh, damn. I mean, already you're seeing things breaking. I guess it depends how the central bank responds to the really high inflation. Imagine if they kept really high inflation and then had a measure of yield curve control or whatever, where the bond prices don't change and their administered yields try to use the Japanese model. I don't know, a lot of things could happen. I personally think that the bond market itself breaks, and when the bond market breaks, credit runs the world, and when credit stops, you head into a very severe recession, if not depression. So what I see is an admission that a 2% annualized inflation target is wrong. They have to increase that and let the bond markets reprice. But they also have to do QE infinity then, because the debt burden is expanding so greatly, because you have in the United States $31 trillion worth of debt. And if you put a 3% interest expense on 31 trillion, that means your interest expense alone is growing at over $1 trillion a year. That will exceed military spending, and the budget doesn't balance, which means that the 31 trillion gets to 36 trillion, gets to 40, gets to, even by the Fed's own projections, they think that the size of the US debt will get to 400% of GDP.
Which is insanity. How can you say that?
I don't know. This is why Bitcoin, okay? Like, I'm done with these idiotic models where people assume that this can continue. And I don't know. I have no other solution, Plamen, and I can talk till I'm blue in the face. But, Credit Suisse failed. I told people for 3 years, I was telling people Credit Suisse would fail. And then it happens, and it's like they're surprised. And it's not because everybody listens to me, but if you had done the mathematics, you would see that Credit Suisse was going to fail. The next one to fail is Deutsche Bank, in terms of a really big global bank, okay? And the repercussions of that are going to be monumental. But now it's like, okay, let's pretend and extend and everything's fine. It's not fine. And it's only math. And like, I just can't, let's go on another trip around Bulgaria and fuck all these idiots that have no clue what they're doing, because it'll happen in time. And that's because it's pure mathematics. It's simple.
Okay. So, in the short term though, right now, US is on the brink of defaulting, and Janet Yellen said that since the beginning of January, they were going to default, but they did this special accounting trick.
Extreme measures.
So what does that even mean? Do you know what does that mean?
Yeah, I mean, they're allowed to twist some regulatory laws and extraordinary measures, and they're, in order to avoid it, but now they're hitting the end of their extraordinary measures. And the funny thing is, they'll most likely, I'm very hopeful, because I don't want them to default. That would be a calamity. I'm very hopeful that they'll extend the debt ceiling by $1.5 trillion. Guess what? In 6 months, we're going to be going through the same thing again, because that's the mathematics, okay?
Yeah, so a guy just recently linked me this Bloomberg article, whatever it was, that US debt ceiling was raised by 2.5 trillion. And I was like, wait, what? I missed that. And actually, it did at the end of 2021. So they filled up 2.5 trillion debt ceiling rise for a year and a half. 2.5 trillion, another debt taken. I was like, what? What? I completely forgot about that. How much did they raise it the last time and how quickly it filled up. So even, as we said, even if they raise it for another 1.5, it's gonna get eaten out so quickly. So 1st of June though is approaching fast. Like now it's 9th of May. So there is literally like 20 days left or something until they either default or they, like they raise the debt ceiling. So could you just like, tell me, what does default in this scenario mean? Meaning, they're not just going to pay their obligation external, they're not going to pay their internal obligation, they're going to cut off. I don't
really know. I mean, they're talking about, not paying, not making payments to certain government employees, including the military. I mean, that impacts people's lives, right? Maybe they don't default on the treasury debt because but they don't pay their let's call them trade creditors, people who are working for them that expect a salary but can't get paid because there's no money. I don't really know, Plamen. I still suspect with high likelihood that they'll solve it because they always have. But there's still that infinitesimally small, it's not even infinitesimal small, that small chance that everybody's a buffoon, okay? Like, I actually think Joe Biden has no clue. Okay. And I think that Janet Yellen has a little bit of a clue, but she's still so fucking stupid as an 80-year-old grandma. Get her out of that chair as well. Okay. And get people in there that tell the truth about this situation, or it's over. And the kids suffer because of incompetence at all levels of the management.
And at the moment, the past few quarters, GDP is not growing at the rate they would expect to be growing. The receipts coming in from taxes are also not up to par of what they were hoping. So my point is that the way I see it is the next 2 years, even if they raise the interest, the debt, and then they're able to, rise it again in like 6 months, in a year, or whenever it gets filled up, this thing is gonna go parabolical. It's just gonna go faster and faster and faster. And the way I see it, like literally in 5 years, I wouldn't be surprised if they're at 100 trillion or at least 50 trillion debt.
I agree. Look, it's math. It's that simple. It's just interest expense is an obligation on a contract called debt. Okay, and it grows organically, and it makes the debt spiral get worse. As the debt spiral expands, the acceleration gets faster, or the velocity, the rate of change increases, and then it gets faster and faster and faster, and it turns into parabolic. That is what mathematics is. And you're a smart guy. Don't overthink it. Like, it's not like I have to tell you correct. No, that's math. It's easy.
Okay. I know that we have just an hour, so we have like about 9 minutes. So can you just you tell me is there anything else important that people should be aware of? One of the last questions that I've written, I would like to put it on the table, is about how, when things started going bad, technological companies started, cutting people off. And now, for the first time, they started cutting people off because they're saying AI is here and we're not going to need that many people. I don't know if you've been following very closely, but there is literally a lot of applications, including, let's say, Duolingo, which I'm using in order to learn Spanish at the moment. So Duolingo, they added this tier for paid customers that when you pay for it, you get like a ChatGPT implementation that is ChatGPT 4 implementation that is like a Spanish teacher that remembers all the courses you went through, all the words you were supposed to learn, gives you customized, made on the spot new what is this word meaning, or let's say what's the missing word in this sentence, and then it actually responds to you like a teacher, because it really makes, like, I don't know if you've played around with it and tested it. it's crazy because like I do not write emails anymore. Even just recently, I had to make an order on wine, and I went to ChatGPT and I was like, I would like to make an order on wine about this, and I'm gonna need this and this and this for this date. And what I gave it was like 3 sentences, and what it gave me back is 5 paragraphs, but they were too formal. They were like, dear something something, and I was like, could you rewrite it a bit more casual? And it rewritten it a bit casual. Not only that, it made jokes because the company name had a special word, and at the bottom it used that word in a different meaning.
Nice.
And in brackets it said, "Did you see what I did there?" Like what?
I don't even.
Wow.
Yeah, I know. I don't know what to say. Look, I mean, I think I've told your listeners before, probably you. I grew up with a rotary dial phone, okay, in my house. Like, most kids that see a rotary dial phone now, they don't know how to use it, right?
I grew up with this, not because I'm as old as you, but because Bulgaria is like 20 years in the past, okay?
Okay, that's fair. That's fair. But look, okay. As Jeff Booth says, we're going to see 100 years worth of change in the next 10 years.
Yeah.
Okay?
Yeah.
Yes, ChatGPT is part of it.
Yeah.
Technology accelerates and goes parabolic. Yes. Bitcoin. Yes. Don't overthink things, people. It's pretty simple in my opinion. The mathematics make it so. Own Bitcoin. If you don't own Bitcoin, you're a fool. If you insist on not owning Bitcoin because you're too smart, fuck it. You're getting culled by the herd, okay? We don't need you. Your baggage. The best thing that could happen is you can't reproduce because you're an arsehole. You're an idiot. Fuck it. The human race gets smarter because those idiots get culled from the herd.
Thank you so much for your time, for visiting us again. I'll be extremely happy to see you again in the next 6 months to come for a podcast again, what was it like now? 7 months ago was the conference in Bulgaria. Again, really, we're so grateful that all of you guys, Food in Bulgaria.
Yeah, what a blast.
And
where are you going? Where's your next conferences? Are you going to go to Madeira this year?
As we talked before the conversation, for personal reasons, I will stay away for a bit for
all right, yeah,
from
all
going
right,
around.
Anyway, I'm looking forward to seeing you again and all the friends that I made in Bulgaria. Okay, give them a big hug from Foss and say keep up the good fight. Okay.
Perfect. Thank you so much, and have a good day to everyone. And we'll see most probably tomorrow. Bye.
All right. Thanks, buddy.